for Under 30. George Tsilis is here, senior markets correspondent for the Schwab Network, to talk Instacart, Maple Bear. Talk to me, George. What's this news? There's a collaboration with Quest Diagnostics. Not the first company I would have figured they partnered up with.
Yeah, I think that's one thing to think about. It's not necessarily a company you'd think Instacart would be partnering up with. But I actually think it's meaningful in a deeper sense, and I'll explain in a sec. But the news really is partnering with Quest Diagnostics, which is actually a diagnostic company from a medical standpoint, include things like blood diagnostics and services and so forth, but also medical equipment. But one of the things about Quest is they're moving into supplemental foods, in other words, nutritional food business, and they're partnering with Instacart not only for delivery, but also advertising services and coaching services. So I think it's more in line with a collaboration for advertising, but also delivery. But deeper than that, I think there's something more meaningful, because one of the things I've talked about with Uber, which is actually one of the competitors of Instacart in the food delivery space, and DoorDash, which is primarily in the restaurant space, but it's also moving into the grocery space, is small parcel delivery. All these companies are going to probably start competing in the small parcel delivery space. And so if you think about this, Quest Diagnostics is moving a lot of medical supplies and diagnostic samples and so forth around, from doctors, clinics to their diagnostic centers and so forth. And I think there's maybe a potential partnership that'll develop in deliveries for Instacart drivers in that particular area of the parcel ecosystem, because there's a lot of private companies out there that are actually in the business of moving, small parcel medical service devices and diagnostic services out there. And I think Instacart, being very well capitalized since it became publicly traded back in September of last year, may end up moving in that direction alongside Quest Diagnostics. I'm not saying it's going to happen, but I actually think there's a little bit more interesting undertone to this news with that relationship than just the food element to the traditional business that Instacart is in.
Yeah, and George, I think that seems like it's been a huge success to some of these other companies that have partnerships outside of like the typical food delivery realm. I mean, Uber Eats is one, DoorDash has been one. That's been hugely beneficial to some of their more recent earnings. But as far as Instacart goes and some of its growth going forward, I know they're relatively new to the public sphere, but how do they continue to strengthen their balance sheet? And how are they looking as far as right now stacking up compared to the behemoths that have become DoorDash or Uber Eats?
Yeah. So it's a really good question, Jenny. So I'm going to use Uber as our primary example, because Uber has really established itself not only as a company, but as a stock, because the stock is actually at new highs as of recently. It's taken some time for Uber to develop that stock over time. They spent a lot of money, and they're now profitable both on an adjusted basis, but also on a GAAP basis. Instacart is obviously a new company from a publicly traded standpoint. If you look at their adjusted earnings, the estimates for 2024, they're expected to earn about 52 cents, and even next year at $1.07. So they're expecting to double their adjusted profits going forward, with sales, which are rather modest at around 10%, $3.3 billion estimates for this year, 2024. I think the story for Instacart is that they do have a lot of growth potential as a company. The challenge is right now, even though the stock is higher as of recent and up about 5% over the last 30 days, is they have about $1.6 billion in losses they need to finance. And they're generating about $3.1 billion in revenue. But I think this is a company that's going to probably continue to issue additional shares, not only to continue to recapitalize their business and expand their business, which is a good thing. It may come at a short-term expense to shareholders, because that is going to, again, eat away at the earnings per share on a per-share basis. The other thing is you got to think about IPO lockups. They tend to happen in quarterly chunks over time. And going into Q1 of this year, which we're in the calendar year, there may be a lockup that expires, considering that the company went public in Q4 of last year. So that might put additional supply pressure on the shares in the near-term future. But nonetheless, the company's still growing. Their gross transaction volumes are growing, sales are growing. I think the advertising component of their business is rather compelling. And if you think about the 1.2 trillion or so dollars that are spent on groceries, which is a lot, that less than 10% is actually sold through e-commerce and delivery channel. So I think the total addressable market is huge. I just think you have to consider the balance of now additional shares coming to market, which may end up putting pressure on the stock price, at least in the next couple of quarters.
George, how big is the risk in your mind of companies like Amazon or Target or Walmart that have pretty big distribution arms already on their own cut somebody like Instacart out of the process altogether?
I think that's a great point to bring up. There's a potential for that, but I think there's probably a better potential for a lot of these companies, like let's say Target or even Walmart, to partner with Instacart eventually. I think Instacart, if you look at the number of pickers, in other words, the people who are actually working for them, it's about 600,000. They have 85,000 stores. So what's nice about Instacart is it's actually very balanced in terms of its exposure. It doesn't have concentration with Target or Walmart or Kroger. I think eventually, as the company grows, there's going to be the network effect. In other words, it's going to become a brand that people go to, and therefore maybe a situation where Target and Walmart end up partnering with them more aggressively versus not. And so that's something to keep in mind, but that's down the road. It's not necessarily going to happen in the next month or two, but nonetheless, I think there's a potential here. And I do think at the end of the day, there's going to be three primary delivery agents out there like Uber, Instacart, and DoorDash, and that's a good sign. In other words, less competitors over time is a good sign for profit margins.
Yeah, and I think a really good point. A great breakdown on this partnership, George, is I do think you explained that in the way that is more interesting than just the headline I read, because I was like, okay, what does this mean, another partnership? But obviously important for some of the Instacart's growth now going forward. But we will leave it there. Appreciate the breakdown as always, George Tsilis, Senior Markets Correspondent for the network.